Ohsung, it's good to have you here.
Thanks for having me.
You're calling for an everything rally in the year end. Tell me more.
Yeah, so we're targeting 7,100 by year end this year. Yeah, I think everything's going to rally. The market is starting to broaden out, and we see about 5 reasons why we think everything's going to rally. Number one, seasonality, especially for the laggards. November, December, and January are the most positive months for the laggards. Number two, the IEEPA tariffs refund, potential refund. We saw the hearing last week. We expect the ruling sometime in December or January. I think there's going to be a reflation trade into that event. Number three, the tax return. The tax return is going to be bigger this year because of One Big Beautiful Bill. We're talking about $800 per person on average versus last year. So that's going to be another reflation event into next year. Earnings were positive and potential government reopen sometime this week, hopefully.
What do you think?
I mean, I think all that stuff is in place. The question I would have is to what degree we're kind of already getting positioned for some of that, because the market, I think, has done an interesting job of looking through the here and now signs of softness. I don't know how we treat the ADP number today, which showed, net negative job growth in the last few weeks. Consumer cyclicals have been kind of wait and see. So I wonder whether that tax refund bump is something that we still have to look forward to and is not yet in the price.
Yeah, I don't think it's in the price yet. I mean, obviously, consumer stocks have gotten, they got hammered over the past 2 weeks or so. Our sentiment indicator actually triggered a buy signal. It's a contrarian signal. So sentiment actually has gotten really negative as of last Friday. So historically, when our sentiment buy signals triggered, we saw the S&P 500 rallying about 7.5% over the next 3 months, being positive 90% of the time. So this is a very strong signal that we got.
How reliant do you feel like we need to be on the whole AI trade? I mean, it sounds like, yes, we're obviously going to have to rely on it to some respects. The stocks are the biggest ones in the market, but you started out by talking about a bigger broadening trade.
Yeah, I mean, I'm still bullish on AI as well. I think this AI CapEx cycle is still in the early innings. We called it the 4th inning of the AI CapEx cycle. One area of AI that we're getting a little concerned about is hyperscalers, because I think this CapEx cycle is almost like mandatory CapEx for hyperscalers that they have to spend to stay competitive. And if that's
why they call it an arms race.
Exactly. And if you look at their free cash flow margin, it's going to an all-time low. If you look at their free cash flow as percentage of earnings, it's going down to 50%. It used to be 100%. So those are some of the concerns that we are seeing, but that's actually great news for AI semis, hardware, and power companies. And I think those are the areas that are going to carry the market.
What about the point about the hyperscalers?
There was a whole chunk of this year when I would say I was surprised that the market was rewarding the spenders and the vendors equally, right? And now it's, Meta's getting punished for whatever it's going to do. If you look at Alphabet, which has been a great stock, and everyone thinks they kind of have, a pretty good exposure and strategy when it comes to AI, next year, they're going to turn 13+% revenue growth into like 5% earnings growth. And the market seems okay with that right now, but it's not clear to me that that's going to be the rule for every company, where if they perceive to be on a treadmill of spend after spend after spend, and it's not like you get to a certain point where you can reap the benefits of scale, then I think some stocks are going to come in for the Meta treatment, most likely. And I think that's also where this Michael Burry debate is. It's not so much, it's not accounting shenanigans. It's how much persistent value are you getting from what you're investing in right now in these GPUs, and how much do you have to replace them perpetually over time.